What we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It's, we've just gotten 2 quarters, consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession. As inflation and interest rates were going up, we were facing incredible headwinds. That started in February of 21. And it looks like, at least so far, that we bottomed on an intraday basis based on our flagship strategy on May 12th. And we actually bottomed before the NASDAQ and the S&P did. The S&P broke down to new lows after that. So that was an early signal that we might be turning the corner here. But I think to really turn the corner, the Fed does need to change its spots. It's getting all kinds of signals that it should, like an inverted yield curve. And yet, I think it's paying attention to lagging indicators of inflation.
Hello everyone, my name is Wagner. Now, according to Cathie Wood, ARK Invest CEO and CIO, the Fed is making a big mistake. Cathie Wood sees the Federal Reserve is making a big mistake by raising the interest rates too quickly. You see, inflation is still a very short-term problem, and this becomes clear when investors start paying closer attention to how the gold and the US dollar have been trading. She has also recently said that she believes the Fed is making a big mistake with their policy, and that we're also getting all kinds of catalysts which should give the Fed a pause and pivot their policies. And the markets are also telling us that they are making a mistake, and I think something will break that matters to them if they keep following the lagging indicator called the CPI. Now, apart from the fact that crypto is having its worst quarter since 2011, crypto as a whole is a much more mature market than it was back then. The S&P 500 is also down 20% year to date, the NASDAQ is down roughly 30%, and the stock market has not seen a worse year to date since 1962. And in June, the Fed raised interest rates by 75 basis points to a range of 1.5% to 1.75%, the most significant one-time hike since 1994. And later in July, it also raised interest rates by another 75 basis points. And the Fed's commitment to the tighter monetary policy comes when inflation runs at a 40-year high. The latest US annual inflation numbers have also continued to increase, and Cathie Wood would argue that the Fed should be worried about deflationary forces, and these are all kinds of deflationary signals, she said, which are going to force the Fed to pivot and reverse their current policy.
And I also think, based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge. And then copper price. The copper price broke down. It broke a 1-year trading range in the $4 to $5 per pound range, and it has come down hard. So I think all of these are signals that that inflation is going to come down. It's going to come down significantly, and that we're probably going to see some deflation. And we've been calling for that for quite some time as well.
You see, deflation is the opposite of inflation. With inflation, debt is borrowed today and paid back with currency tomorrow that is worth a lot less, which makes the cost of debt less and its currency is devalued. And interest rates are near zero. The buying power declines and deflation works in the opposite way. With deflation, prices get cheaper. Now this sounds like a good thing, but this can actually lead to a negative feedback loop, where people believe products will get cheaper if they just wait long enough, so they stop buying and wait for the cheaper product. This decreases the growth for the economy overall. And that is exactly why Cathie Wood is worried about deflation. The Fed could raise interest rates too high and too often, causing deflation to hurt the economy. And there are a few deflationary signals that will cause the Fed to pivot their policy. The deflationary signals include trading patterns of gold, the US dollar, yields, oil and copper, and gold, which is often viewed as an inflationary hedge out there, and has also stumbled down below $1,070 and is down around 12% in the last 3 months. And this trading pattern does not support an inflation narrative, Cathie would point out, but gold has been one of the most reliable inflation hedges out there, and it has broken down to the low end of its range.
But I think the reason for the pivot is going to be a massive amount of deflation in the system. It's already here. If you look at commodity prices, the gold price, for example, it actually peaked in August of 2020, and it's at the lower end of a 2-year range. While copper has broken down, oil is breaking down, lumber has crashed, iron ore as well. Freight rates out there are suggesting that the supply chains are loosening up quite significantly. The rates are coming down. So we've got deflation in the system.
She also pointed out that deflation is the greater risk here and not inflation. Cathie stated, when talking about the prices of gold, she added that the latest dollar strength is an even bigger sign of deflation, noting that the US dollar index is trading at a 20-year high. Also, the 10-year Treasury yield is below 3%, and oil is down more than 20% on the month. Even oil is starting to break despite what's going on in Russia because the global economy is in a recession. So demand has gone higher than 2019. This also brought out comments from Elon Musk stating that if interest rates are increased yet again, then it could send the prices down dramatically. And when consumers expect prices to decline, they often delay making purchases until when they think prices will be lower, decreasing the overall demand. Now, this could also affect whether people are buying Teslas now or decide to buy later when EVs may cost less. And this goes in line to what Cathie Wood believes, that deflation is on the horizon. She said all things point to the inflation problems being overblown.
The way I describe what's going on right now, I was in my early days in my career in the early 80s when Volcker was taking a sledgehammer to inflation because it was embedded in the system after 15 years of profligate spending, Vietnam War, Great Society, and then going off the gold exchange standard. A sledgehammer, that's what he needed. That is what I believe Chairman Powell thinks he needs. And we just don't think that's true because we see so much deflation. And then one more thing. We also see a massive inventory overhang around the world. You've got Europe in recession, China in recession effectively. And here in the United States, retailers are bulging with inventories, which will have to be cleared with discounts. So we think we're going to see some major downside surprises in inflation during the next 3 to 6 months.
And she also disagrees that inflation is embedded with a broader market economy and sees the inventory problems resolving within the next few months. Now, I really think this is more of an inventory problem. She said, I think we could be out of this when economists are finally declaring that we are in a recession. That's about how bad the call has been out there. Everyone thought that inflation was embedded into the economy and that a recession was only a question mark. And ARK Invest ETFs have experienced some of the largest losses during the first 2 quarters of 2022. And obviously, as stocks saw a broader sell-off, the ARK Innovation ETF fell down 53% year to date. And all of the people who bought this are also down 53% year to date. But I believe that selling out of Cathie Wood's portfolio right now might be a loss you will never be able to recover from. But still, what we know from history is that stocks will recover, and if we do see a pivot from the Fed, then they could recover much faster than expected. Unless you believe that's not going to happen and we will only go down further from here. And I also want to spend a little time on crypto. You see, we've seen Bitcoin way back in November at $69,000 and it is now trading at around $20,000, $21,000, and it's also just below its 200-week moving average, which is at 22,500. Now, historically, rate increases have been negative for Bitcoin this year, and in context, the time during which the Fed raised its benchmark rates from near zero in March 2022 to 2.25% to 2.50% in August 2022 has brought a 50% drop in the price of Bitcoin. Now, even Alphabet or Google has cautioned that layoffs may be necessary in order to remain 20% more efficient. However, Fed Chairman Jerome Powell has stated that the central bank might raise rates further to achieve the desired inflation objective of 2%. And the CPI, or the Consumer Price Index in the US, was up to 8.5% year on year in July, and the August inflation report came out to below expectations. And that is still well short of the Fed's 2% inflation objective, which, according to former Bank of England rate setting committee member David Blanchflower, will result in a hard landing. And this could result in an increase of unemployment and an economic downturn, comparable to Elon Musk's and Cathie Wood's prediction of deflation. But similarly, Cathie Wood believes that Bitcoin will reach $1 million by 2030, because even though prices have fallen 70% from their all-time high, there is still plenty of more adoption happening behind the scenes.
We are very positive in Bitcoin. We have in our Big Ideas 2022, which you can find on our website, we have a price target in 2030 of $1.3 million. It's only 21,000 now. And we can show you the building blocks, how we get there.
Cathie Wood also referenced the most recent data stating that used car prices fell 4% in August and almost 50% by 2022. The indicator once again reflects that consumer demand is on the downfall, which could signal deflation is coming or is here already. But do you guys think that the Fed will be forced to pivot to avoid deflation? Let me know your thoughts down in the comments below. And as always, please do not forget to like and subscribe for more content. Until next time.